Welcome to our SWA Take 5, where today we're going to dive into, we'll say, the complicated world of investment statements, where frankly you can see a bunch of line items, percentages, tickers, and left wondering, what do I actually own? Jason, with that backdrop, maybe help simplify this for us. What do we actually own?
Sure. Whether you're a conservative or aggressive in terms of your investment objective, nearly all of our clients own some level of equity or stock market exposure. And when we say equity exposure, we're not talking about owning just pieces of paper or random symbols on a screen. You own businesses in your core portfolios. Now, we use ETFs to give you diversification, but let's not forget, these ETFs are made up of real companies. For example, some of our top holdings include names like Apple, Microsoft, and Amazon. And these aren't just stocks, they're actual businesses that you and I and we all work with or interact with every day.
Yeah, that's a great reminder, Jason, that these are actually businesses, and over the long term, what drives their performance and ultimately our portfolio value is how well these businesses operate and grow, correct?
Absolutely. One of the biggest drivers, probably the biggest driver of long-term performance is earnings. And earnings are simply a company's profits or what's left over after expenses. And earnings are really the cash flow that fuel growth, innovation, and ultimately shareholder value. And when earnings grow, stock prices tend to follow. It's hard to keep that perspective sometimes when the news is saying, oh, the markets or the Dow or the S&P are down 1%, or maybe there's short-term worry about the direction of the economy. So it's no wonder that the average investor feels anxious. It's kind of like watching a weather report and panicking every time it rains.
Sure. So Jason, when we turn on the TV and we see a company's stock price going up and down and it taking a hit, should we be worried about that, or how should we look at that in the grand scheme of things?
A great question, and I'll answer that by just saying, remember, you all, and all of our clients own businesses. And businesses adapt. They cut costs, they launch new products, they enter new markets. So a short-term drop in a stock price, it doesn't necessarily mean that a stock or a company or a business is broken. It might just be a temporary setback. Staying the course is pretty simple on paper, but it's not easy. And one of my favorite quotes is by a gentleman named Nick Murray, who says long-term investment success is almost totally a function of how you react to short-term market movements. So emotions really can be the enemy of successful investing.
Yeah. Again, thanks for such great reminders, and through all the ups and downs, that we should be remembering that we actually do own companies, and we own some of the best businesses in the world. So in a short amount of time, hopefully we've taken something that is fairly complex and simplified that. But should you have any additional questions, please reach out to Jason or myself or anybody else here at the Saving Wealth Advisors team, and we'd be happy to answer any questions you have. But until next time, we will talk to you soon.